what does this mean for interest rates? How do central banks, especially the US Fed, react to something like this? Because apart from AI, we are also today, have a situation of war, trade tensions. All of those are suspected, or people fear that it's going to be inflationary as well. So what does it mean for interest rates and central bank responses going forward?
That also is a great question. This is one of the most difficult periods for central banks around the world. But let's focus on the Fed, because everybody, in a way, it's the most important of them all. There is a massive potential internal debate stroke split coming on the Fed. If you are emphasizing...
Jonathan, can you just hold up the mic? Yeah.
Sorry. If you are emphasizing the longer-term productivity benefits of the current technology wave, you're a supply-sider, like the new chairman of the Federal Reserve, and you would say there's no need to raise interest rates in the face of a short-term shock to prices that's coming from whatever source, whether it's the war or the boom in AI infrastructure. And if you're a more sort of traditional Fed person, like most of the members of the FOMC, you'd probably think that what's happening now is a reason to raise interest rates. And we don't know yet how that is going to play out. Probably in the short run, nothing happens in terms of rates one way or the other. But that debate between the long and the short-term effects of AI is, I would say, for most central bankers, more biased towards the idea that we raise interest rates. If you raise interest rates at a time of very high levels of government debt interest goes up, you get yourself possibly into a kind of vicious circle of rising rates and rising long-term yields, which has pretty nasty implications for what happens in the rest of the equity market.